Steve, Elaine Lawrence is Chief Investment Officer at Balfour Capital Group, joins us around the desk with his thoughts on the China situation, the China markets. Very interesting notes, Steve. Thanks very much for sending them across. You're seeing acute value in Chinese economy and the real estate sector, but you're also saying that China's bearish market sentiment is likely to continue in the run-up to the U.S. election. So do you think the dichotomy between what the economy does versus the markets will remain?
This is what I believe. I believe that China is a bull. I mean, very simply said, I think this is the time when there's fear and when there's uncertainty. You know, it's not everybody's cup of tea, but as an investment manager who manages 350 million, okay, in markets all over the world, you have to. There's an element of pricing and timing when you execute a transaction. So it's all going to be based on value, and there's a tremendous amount of value in China, especially in real estate, but it's all in the buy.
So pricing-wise, everybody knows China looks attractive. How do you solve the timing issue?
Well, you know, when there is a timing issue, what you need to do is, if you're accustomed to building a position in any type of investment portfolio, you slowly get into that position if you believe in the fundamentals of the institution, whatever the market is, because each market talks to each other. There's no question about that. I mean, today you've got Super Tuesday, you've got massive economic numbers coming out this week, okay? You've seen the propulsion, and what you've seen in the NASDAQ it's almost shock and awe, all right? So it wouldn't surprise me that you could see something like the NASDAQ come off 5–10%, but it's up 30 and change, all right? So when you look at that divergence, you'll see the teeter-totter effect happen. And I'm a firm believer in that.
Can I just ask, because I can completely understand that the asymmetric opportunities that are right now in China, particularly if you're, not even if you're doing it for a long term, if you're doing it just for, you know, a short-term tactical opportunity, but in terms of, you know, it's one thing to say real estate, it's one thing to say, you know, that there's going to be strength in the EVs, but there are a number of mitigating things that could impact them. It's much easier, as you know, to, you know, apply any kind of analysis of the potential variables in the short term, but when we're talking, you know, short, medium, it's a lot trickier. So when you look at the property market, and I suppose the risks that are still there, because you're saying real estate is ripe for investment, but China bunker might collapse. You could still see further pressure with country guard. And then you look at EVs and the Biden probes and what the EU can do. Is there still a case to be made that you can be investing there now?
In China, absolutely. They want you to invest there, okay? I mean, look at right now with BYD. They're doing a massive deal in Mexico, all right? They're going to sell it a ginormous amount of cars, and that's why they built the plant there, okay? So they've got their foothold, all right? And they also knew the economies of scale as far as labor. So all that exporting, you know, is not going to come into the United States, but one day it may. All right, so they have to plan for the future. All right, I think that's a very smart strategic move that they're making, undoubtedly.
So would you be selective though within those areas? So if you're talking EVs, are you talking specifically BYD? And if you're talking real estate, you're talking specifically what exactly?
Yeah, I mean, excellent question. Let me address the first point. All right, as far as the electric cars, like any other market, there are companies that are going to fall by the wayside. That's just the efficiency in any market. All right, when it comes to real estate, and one thing you'll see with the real estate market in general, when it goes through massive cycles, and it does, all right, I've seen it, you know, I've been in the market since 1989. All right, so I've seen collapses, saving and loans crisis. Everything has a way of repeating itself, but just with a little nuance and twist. But the fundamentals are the fundamentals. Fear, you have to be nimble, okay? You can't get in front of a freight train also, okay? And you've just seen that with companies like ASML, Supermicro. We've been long a lot of these securities for quite a while, so we're on the right side of that. But if you're on the wrong side of that and don't have the proper diversification in general, you're dead.
What's the allocation to China right now?
Right now, you know, we're pretty heavily involved. I mean, we've been long the Hang Sengs from these levels. We were short originally since 2022, all right? And then I made a conscientious decision for the firm that, you know, this is when you have to step in. All right, so I see my allocation as far as a client base or the allocation of the portfolio. I'll answer both of them for you, okay? I would say we're leaning right now about 10 to 15%, you know, of our stocks that are going to be based, you know, offshore, all right? You know, I'm mostly a player of the indices.
What's the time horizon on this? Is this for a long-term bet, or is this for, you know, a short-term tactical?
Great question. You know, we're 65% algorithmic, okay, running mathematical quantitative strategies, inter and intra-market correlations, and the balance is human. Okay, so going back to the facts, all right, that each market talks to each other, they absolutely do. I mean, I'm looking at screens. That's what I do for a living, and I've been doing it for a long time. So I'm used to the psychology of what I'm seeing. You know, I'm watching psychology all day, above and beyond the mathematics, and you'll see that the psychology and the mindset is so critical, and that's what they're actually trying to do right now in China. They're trying to foster the mindset of trust within the public. All right, because when you go through that type of exponential growth, the world isn't even used to that type of exponential growth. All right, now with the little, they threw in the AI, all right, it's going to be even faster and quicker.
Got it. Mm-hmm. Yeah, we need to take a break right now, Steve, but you're with us for another block, right? Do the honors, Will.
It's Steve Lawrence of Balfour Capital Group. He'll be staying with us. We're back with Steve Lawrence of Balfour Capital Group. Now, before the break, we're talking, about China EVs. We're talking about real estate, and let's talk specifically about, I suppose, the real estate opportunities, because we were just discussing in the break the opportunities that exist there. I suppose when it comes to the distressed assets, be it of an Evergrande or any other company, is this something that you would suggest that? Does it require some kind of sophistication in order to be adopting these strategies or trying to, take on this kind of significant risk? So I would imagine you also have to be incredibly nimble if things turn for the worse.
Like in anything else, when you've seen cycles, all right, you saw it in the 80s. I mean, you could see the markets now, even in the U.S., some of the corporate real estate and the CNBCs that have problems, all right. For example, Evergrande. I can assure you that there'll be pricing, all right, you will be, but it's complex, all right, so it's for the ultra sophisticated buyers who truly understand, okay, how to buy assets. And like any other business, you have to keep it simple, but the math does, numbers don't lie, people do, okay? So the numbers are gonna be the numbers, the rent rolls are gonna be the rent rolls, so you're gonna have to be nimble when you go in. But someone who's got a lot of experience, and you saw, unfortunately he passed away, a guy like Sam Zell, all right, that was his whole basis, of forecasting something ahead of time. That's the key to any investment strategy, is how to get in before the street gets in.
So on Evergrande, you're looking at distressed assets. And I just want to caveat that you're, a long short guy. So you're a hedge fund, right? You're running a hedge fund, because a lot of retail investors may not catch that story accurately.
Right. Let me clarify myself. We're an investment bank, we're a hedge fund, and we're also, VC. I run the hedge fund. Okay. So when I take a position, that would be like an over-the-counter position. All right. But typically, I'm only involved in, bigger companies in general. All right, globally. So I'm looking at all the market correlations. But by knowing that, I also look for different plays in the market. Okay, so the duration of a trade could be...
So Evergrande is a distressed debt trade for you?
Evergrande is a distressed trade for me. That's exactly what it is.
Okay. I also want to talk to you about, some of the exporters, or rather... MNCs coming out of China, and do those companies interest you? Because obviously we spoke about BYD. Mm-hmm. 10 years ago, China's growth rate was a lot higher, but fewer companies were globally competitive. A lot of that is changing. You look at Meituan Dianping, right? A company that's going overseas. It's performed, I think it's done about 11% year to date. Pinduoduo has really hit it out of the park, and again is expanding overseas. And that's the case with TikTok, which is obviously not listed, Huawei, CATL. Do you think that globally competitive companies out of China can withstand this economic downfall?
Oh, I don't look at it as an economic downfall. I look at it as an opportunity. Mm-hmm. So the answer to you is yes.
Economic struggle, whatever economic transition that China is going through.
The short-term struggle that they have is they're still growing just about faster than anybody else. So people are very short-sighted when they say something like that. All right, but there's no question about it that there's a lot of innovation. All right, and I'll give you an example. Today, they didn't decide to spend more money on the military, for military spending. So that's giving it, my humble opinion is that there will be some very, very good long-term transactions between the United States and China.
I just want to simply ask you, are you big on domestic China? Are you big on export China?
I'm big on both, okay? All right, I'm big on both sides, what's profitable and looking for value.
Can I ask you, because you've spoken a lot about identifying these asymmetric opportunities and taking advantage of the value proposition. When you look at somewhere like Japan and their equity markets right now, you could almost make the case for both. You could say on a structural basis, they're still criminally undervalued if you're looking at just P2B, but if you're looking at perhaps the run we've seen of late, then you could say, hey, hold on a minute, this is looking frothy. So how do you look at Japan and Japanese equities? Because this is obviously what everyone's talking about right now.
I mean, right now it's in play, okay? But the move, once again, you've just had a huge move to break 40,000. All right, and people also have a short-term memory that they seem to forget that there were years, okay, where the market was dead. All right, now it's easy to say, oh, I wish I would have bought, the Nikkei at 23,000. I firmly believe that, you're purchasing the Hang Seng at these levels, okay. You're going to look back at it 3-4 years. You may not see it ever go below 15,000, ever, okay, because the timing, all right. And based on the valuation, look at some of the tech stock valuations and the separation of that. Above and beyond, all right, the energy aspect, there's so many moving parts to it. So it's determining what companies to buy, how to buy them, and when to buy them. It sounds easy, but it's not.
So if you're taking, and I completely understand, say at the Hang Seng position and you're running on the assumption you're going to have a put at 15K because of the national team and 17K and beyond is something that's easily achievable. Is there anything in your mind that you've assessed that would be the downside risk to that case, whether it be the geopol, whether it be anything else? So what are the risk factors in your mind?
The risk factors in my mind right now is interest rates globally. You print too much money, you're going to have a problem, okay? The debt levels in the United States are, off the charts. All right, but you'll see that in the struggle between China, the U.S., and all the geopolitical events, at the end of the day, okay, they need each other, all right? And it's a negotiation play, in my opinion. I mean, that's what I firmly believe.
Steve, we have 1 minute to go, so you have to help me out here.
I will.
That 10-15% allocation in China, what is your return expectation on that?
Conservatively, probably 25%.
Got it. Great to have you on the show.
Well, thank you for having me.
Come back again. So this is an insightful conversation.
It's a beautiful place.